Welcome to the Deep Dive, where we take the information you're already encountering and go, well, deeper. You send us the sources, and we extract the crucial insights, saving you the endless scroll.
And today we have a particularly interesting piece of analysis, courtesy of one of our listeners. DR 2025-05-0520, Deep Dive Top 10 U.S. Listed Memory Companies 2025 Report.pdf.
Exactly. Our mission today is to really understand the current state and the future trajectory of the top U.S. listed companies in the computer memory space.
Yeah, we want to get a handle on their game plans, their financial health.
And crucially, how they're positioning themselves to ride this massive wave of artificial intelligence.
Right. And this isn't just about the companies you immediately think of when you hear memory.
No.
Well, yes, we'll cover memory-centric giants like Micron and Western Digital, obviously, but also those hybrid players, with significant memory needs and influence, like Intel and NVIDIA.
Ah, okay, so the big consumers, too.
Exactly. And we'll even touch on the HDD leaders, Seagate and Marvell, because, well, they have important roles in storage controllers and the whole data landscape.
Okay, let's unpack this. The memory industry, it's known for its cycles, right? These big booms and busts.
Oh, absolutely. Periods of high demand, prices shoot up, then maybe oversupply hits and things cool off.
Yeah.
But this report points to something pretty significant happening right now.
Yeah. What's that?
It does. Since late 2023, we've observed a strong and quite rapid rebound, both in memory prices and overall demand after a notable downturn.
Interesting. So that sets a fascinating stage for looking at these companies.
Definitely.
So let's zoom out for a moment. What does the global memory market actually look like? Who are the dominant forces here?
Well, the global memory market is surprisingly concentrated. Really tight.
How so?
We talk about DRAM, that's the dynamic random access memory in. Like everything from phones to big servers, 3 companies basically run the show.
3.
Yep. Samsung, SK Hynix, and Micron. Between them, they control around 95% of the market.
95%. Wow.
Yeah. And historically, Samsung has been the top dog, the biggest player. But what's really interesting, and the report highlights this, is that in early 2025, SK Hynix actually surpassed Samsung in market share.
Really?
Driven by incredibly strong sales of high bandwidth memory, or HBM. That stuff AI loves. Micron holds a solid 3rd position.
That's a big shift at the top. Okay, and what about NAND flash, the other key memory type for SSDs and storage?
The NAND flash market also has its dominant players. Samsung leads there as well. Then you've got the combined Kioxia and Western Digital partnership.
Right, the JV.
And then SK Hynix, which now includes Intel's old NAND business, Solidigm. And Micron is in there too.
So still pretty concentrated.
Very. And this structure, as the report highlights, is a key reason behind those big boom-bust pricing cycles we've seen historically.
Right, that constant tension between production capacity and actual demand. But it sounds like the report indicates a recent break in that pattern, a big upswing.
Precisely. Throughout 2024, we've witnessed a really substantial rebound, both in memory prices and overall demand.
Give us some numbers. How big a rebound?
Well, to give you a sense of scale, DRAM revenue saw a massive 75% year-over-year increase.
75%.
And NAND revenue wasn't far behind with a 77% jump.
Okay, so what's driving this? Is it just the cycle swinging back, or is there something else going on?
The report strongly emphasizes the pivotal role of AI-centric memory.
Ah, AI again.
Yes. Think HBM, which is essential for those powerful GPUs used in artificial intelligence, machine learning, all that stuff, and also high-density server RAM. The demand for this kind of high-performance memory is just so robust.
So it's lifting the whole market.
It really is. Even while demand in more traditional segments, like PCs and smartphones, remains relatively, well, lukewarm.
That makes perfect sense. AI needs just tons of data processed incredibly fast, so the demand for high bandwidth, high capacity memory must be enormous.
Exactly.
I was particularly struck by something in the report, that HBM, even though it's a small percentage of the actual bits produced, it could be a huge revenue driver.
That's what's fascinating here, the disproportionate impact. HBM might be, say, only around 5% of the total DRAM bits shipped.
Right.
But because it's high value, it could contribute maybe as much as 20% of all DRAM sales revenue in 2024.
20% from just 5% of the bits.
Yeah. It really underscores how critical this specialized high-performance memory has become. And it raises an interesting question, doesn't it?
Which is?
Could this shift towards high-margin specialized memory fundamentally change the whole profit picture for these big DRAM producers?
It certainly sounds like it could, and it seems the U.S. government is watching all this closely, especially domestic production. I remember hearing about things like the CHIP PS Act,
Absolutely. U.S. policy responses like the CHIPS Act are specifically designed to incentivize domestic semiconductor manufacturing, and that includes memory.
So we're seeing companies respond.
Oh, yeah. We've seen significant announcements. Micron, for instance, has plans for massive investments in new fabrication plants, fabs, right here in the U.S. The goal is to reduce reliance on overseas production.
And Intel too, right. Though maybe more focused on logic.
Right. Intel is also making a major push into foundry services with new U.S. fabs. But, yeah, their main focus there seems to be logic chips, not memory itself directly.
So these companies get government support to build stuff here. That sounds like a straightforward win, right? Good news for them?
Well, it's a bit more nuanced than that.
How so?
The report also points out this ongoing split, this bifurcation of tech supply chains.
Yep.
It started a few years ago under Trump, and it's still happening.
Okay.
So while U.S.-aligned firms are indeed getting government support, which is definitely a tailwind, they're also facing headwinds. Things like lost sales in China, increased costs from tariffs, compliance requirements. It adds up.
So it cuts both ways.
Exactly. Micron, for example, is specifically warned about this in their financial filings. They mentioned that government actions and trade restrictions can increase their manufacturing costs and limit how effectively they can compete in certain key markets.
So it's a balancing act. Domestic support versus international market realities.
Precisely. A blend of opportunity and challenge on the geopolitical front.
Okay, so let's dive into some of these individual companies. Starting with Micron, they're right in the thick of it with DRAM and NAND. What's their core focus?
Micron's a major player, like you said, in both DRAM and NAND flash. They put a lot into R&D, and they serve a really diverse range of markets, data centers, mobile, PCs, automotive, industrial, pretty broad.
And how are they adapting to this huge AI-driven demand?
Their AI strategy is heavily focused on providing those ultra-high-performance memory solutions that the powerful AI accelerators need.
Like HBM.
Exactly. They worked closely with NVIDIA on their GDDR6X memory, and now they're significantly ramping up production of HBM. Their CEO has been very public, saying memory is absolutely crucial for pushing AI capabilities forward.
And the report mentioned some pretty impressive early results for their HBM business.
It did. Micron started volume shipments of their HBM3 memory in late 2024, and they generated several $100 million in revenue just from HBM in their fiscal year 2024.
It's not small change.
No. And their ambition is significant. They're aiming to get their HBM market share up to match their overall DRAM market share, which is around 22% by 2025.
Wow. Ambitious goal.
Very. And they're already looking ahead. Next-gen HBM tech like HBM4, higher capacity stacks like 12-high HBM3E, promising even better performance and power efficiency.
And it's not just HBM, right?
No, beyond HBM, they're also seeing strong adoption of their DDR5 memory in AI servers, and record sales in their data center SSD business, too.
That really paints a picture of a company right at the forefront of this AI memory wave. So, according to the report, what are their key strengths? What makes them strong?
The report highlights several. Their sheer technology and manufacturing scale in both DRAM and NAND is a huge advantage.
Right, being one of the big three.
Exactly. Being one of only 3 major global DRAM producers gives them considerable leverage, especially when supply gets tight. They really emphasize their technology leadership in manufacturing and operational excellence.
Okay.
And they benefit from a pretty well-diversified product mix across different markets. Plus, a strong balance sheet gives them financial flexibility.
For investments in downturns.
Right. And as we've discussed, their current leadership in HBM technology is a crucial strength right now.
Makes sense. Okay, flip side. What potential weaknesses or threats does Micron face?
Well, intense competition, obviously. Samsung and SK Hynix are huge, and being part of big conglomerates might give them access to greater overall resources, plus potential benefits from, industrial policies in South Korea.
And China.
Yes. The emergence and growth of Chinese memory producers like YMTC and CXMT, that's a significant long-term competitive challenge.
Yeah.
And then there's the specific issue of the U.S. government's ban on Micron products in certain critical infrastructure in China. That's a direct headwind.
Ouch.
And of course, the inherent risk of those memory industry oversupply cycles always looms in the background.
The report also touched on Micron's recent financials. Sounds like they've had a real roller coaster.
Absolutely. Fiscal year 2023 was tough, significant losses. But fiscal year 2024 saw a dramatic turnaround, a huge swing.
How dramatic.
In the fourth quarter of FY24 alone, their revenue surged by 93% year over year. 93%. And they returned to profitability.
Impressive.
They also reported record data center SSD sales during that period. And looking forward, their guidance for fiscal year 2025 anticipates record revenue for the company.
That's strong momentum. What are the specific factors fueling this optimism, the bullish catalysts?
Well, the current memory upcycle is one thing, but it's really turbocharged by that exceptionally strong demand from AI applications.
The perfect storm, in a good way.
Kind of, yeah. They're experiencing what they describe as a V-shaped recovery. Their tech leadership, especially in HBM and next-gen NAND, gives them a competitive edge. Their diverse end markets offer some resilience. And there seems to be more supply discipline within the industry lately, which helps pricing. And finally, that government support via the CHIPS Act is a notable tailwind.
Okay. And conversely, what could potentially slow them down? The bearish factors.
Continued weakness in those more traditional segments PCs, smartphones could dampen overall growth if it persists.
Right, the legacy markets.
Exactly. There are also inherent execution risks. Ramping up production of complex new tech like advanced HBM and NAND isn't easy.
Lots of potential pitfalls.
Definitely. And as we mentioned, the memory business is super capital intensive. That means big cash outflows during downturns or when they're investing heavily in new fabs.
So pulling it all together, what's the investment recommendation for Micron in this report?
The recommendation is a buy.
Buy.
The report bases this on their strong earnings momentum, a valuation that seems reasonable given the growth prospects, those structural demand drivers from AI, and their strong tech roadmap. Seems like a good combination right now.
Okay, interesting. Next up, Western Digital. They're a bit different, right? Playing in both the old hard drive world and the newer SSD space.
That's correct. Western Digital is a hybrid storage company. They've got a broad portfolio, traditional hard disk drives, HDDs, and NAND flash-based solid-state drives, SSDs.
And they got big in flash through SanDisk.
Yeah, their acquisition of SanDisk made them a significant player in NAND manufacturing through that joint venture they have with Kioxia in Japan.
So how is this AI boom hitting Western Digital? It's not quite as direct as for Micron. Is it more about storage than the memory chips themselves?
Right. While they don't make the memory chips in the AI processors, the AI boom is generating just massive amounts of data, and all that data needs to be stored somewhere.
Which means demand for their products.
Exactly. It benefits both their HDD and their SSD businesses. They've recently reported record-breaking HDD demand from their big cloud customers. Revenue from that cloud sector has shown substantial growth.
Even HDDs are seeing an AI boost.
For mass capacity, absolutely. And their high-performance NVMe SSDs, that's the fast interface for SSDs, they're also being deployed in AI servers for quick data access during training.
So they're involved on multiple fronts.
Yeah, and they're actively developing AI-optimized storage solutions now, trying to cater specifically to these evolving needs. Their CEO has specifically commented on how AI is really bolstering their business.
The report also mentioned some potential big strategic changes for Western Digital, something about splitting the company.
Yes, there's been ongoing pressure for a while now to potentially separate the company, spin off their flash memory business from the traditional HDD business.
Why?
The idea is that the two businesses have different profiles, different valuations, different cycles. A separation could potentially unlock value for shareholders.
Does anything happen?
Well, there were earlier talks about maybe merging their flash unit with Kioxia, their JV partner, but that didn't quite pan out. However, they have announced plans to proceed with a separation of the two units internally.
So that could be a catalyst.
Could be, yeah.
What are some of the core strengths that Western Digital brings to the table?
Well, that broad product portfolio covering both HDD and SSD is a key strength. They have a long history of innovation in both areas.
Right.
They've also been really focused on cost reduction initiatives lately, and they're pushing ahead with advancements in high-capacity HDDs using technologies like AMR.
AMR, heat-assisted magnetic recording for denser drives.
That's the one. Helps them keep HDDs relevant for mass storage.
Okay. And what about their weaknesses or challenges? What holds them back?
A big one is their relatively high level of debt. That's a significant weakness.
Leverage.
Right. And their cost structure for making NAND flash.
Yeah.
It's not considered best in class compared to some competitors, partly due to the complexities of that Kioxia joint venture. Their profitability can also be quite volatile because of the NAND market cycles. Plus, they have considerable exposure to the PC client market, which has been a bit soft. And some investors have viewed that conglomerate structure as a disadvantage.
What are some of the opportunities they could grab? Where's the upside?
Well, the explosive growth of data from AI, cloud, edge computing, that's a massive opportunity for their storage solutions, both HDD and SSD.
The core market growth.
Exactly. That potential separation of the flash business, like we mentioned, could be a big catalyst for value creation. They're also exploring new storage tech, and data localization trends could also benefit them.
And the threats, what keeps them up at night?
The long-term trend,
Yeah.
the secular shift of SSDs gradually replacing HDDs in more and more applications, that remains a significant threat to their traditional HDD business.
The elephant in the room for HDD makers.
Pretty much. They also face intense competition in NAND flash. Geopolitical tensions are a risk. Any friction within that Kioxia JV could cause problems. And of course, broader macroeconomic downturns are always a threat.
How have their recent financials looked? Did the report comment on that?
Yeah, they've shown a positive turnaround, moved from losses back to profitability recently. Their gross margins have improved, and they've successfully reduced their net debt, which is good.
What?
But they did slightly miss earnings per share expectations in the first quarter of their fiscal year 2025. So maybe a little bump in the road there.
Okay. So the bullish arguments for investing in Western Digital, why might someone be optimistic?
Well, the strong growth in cloud and AI storage demand is a major tailwind for both sides of their business. The potential recovery in the flash market and that anticipated separation of the flash business are seen as significant catalysts.
Okay.
Plus, they hold product leadership in key tech, like HAMMR for HDDs and BiCS NAND, that's their 3D NAND architecture.
Yeah.
And their current valuation, the report suggests, might offer some upside potential, some of the parts thinking.
Right. And the bearish concerns, the reasons for caution.
A potential relapse in NAND pricing would definitely hurt their profitability.
Mm-hmm.
The long-term structural decline of the HDD market, that's still a major concern.
Can't ignore that.
No. There are also execution risks and restructuring costs associated with that planned company separation. Their high debt levels in a high interest rate environment are also a factor.
Yeah.
And things like customer concentration and managing inventory levels.
So bottom line, what's the investment recommendation for Western Digital in this report?
The recommendation here is also a buy.
Another buy. Rationale.
The thinking is they're currently undervalued, they're leveraged to this huge data growth trend, and there's that potential catalyst from separating the flash business. Lots of moving parts, but potential upside.
Okay. Let's move on to Seagate. They're the other big HDD player, right? Mostly focused just on hard drives.
That's right. Seagate is predominantly an HDD manufacturer, Western Digital's main competitor in that specific segment. Unlike WDC, they don't have their own internal flash memory manufacturing. They're all in on spinning disks.
So how is AI impacting a company that's just focused on hard drives? Seems counterintuitive, maybe.
Well, interestingly, AI workloads are actually emerging as a significant new demand driver for mass capacity storage, and that's Seagate's sweet spot.
Really? How does that work?
They've reported a recovery in order volumes specifically because of AI initiatives. Apparently, these new AI systems often require substantially more storage per server node than traditional setups.
Just soaking up capacity.
Exactly. So Seagate's latest high-capacity drives, including their upcoming 30-plus terabyte drives using that AI technology, are specifically designed to meet the needs of these massive hyperscale data centers building out AI infrastructure.
So AR is key for them, too.
Very key. They're also developing some object storage and data management software trying to integrate more closely with AI workflows, potentially.
What are Seagate's key strengths in this market?
They hold a leading position in the market for high-capacity HDDs. That's their bread and butter. And they have a first-mover advantage, arguably, in adopting HAMR technology to keep pushing storage density higher.
And they make their own parts.
Yeah, they benefit from a vertically integrated supply chain for critical components like the read-write heads and the magnetic media itself. Gives them some control over cost and supply.
Okay. And their weaknesses or challenges?
Well, the big one is that lack of diversification. Being 100% HDD focused is a major weakness long-term, given the SSD trend.
Right. All eggs in one basket.
Pretty much. They also carry a significant amount of debt, and maybe we're a bit slower in adopting some cutting-edge advancements in certain areas compared to competitors in the past.
Anything else?
High customer concentration, a lot of revenue from a few big cloud players, and their manufacturing is heavily concentrated in Asia, which carries geopolitical risk.
What are the potential positives for Seagate, the bullish catalysts?
The continued growth in demand for mass capacity storage, driven by both AI and general cloud growth, is the major bullish factor. That first mover advantage with HMR is significant too, and they're focused on operating leverage and cost discipline.
And the potential negatives? The bearish side.
An accelerating trend of SSDs replacing HDDs in more applications. That's the biggest threat. Any delays or major problems in successfully ramping up their AMR technology would be a huge setback.
Execution risk on AMR.
Big time. Plus, fluctuations in enterprise and cloud spending cycles, ongoing geopolitical risks, and continued strong competition from Western Digital are all potential concerns.
How have their recent results looked, according to the report?
The report suggests an improving near-term outlook for Seagate. Seems they're benefiting from that broader recovery in memory and storage demand.
And the investment recommendation for Seagate.
This one's a hold.
Hold. Why the caution compared to WDC?
The thinking seems to be that the improving short-term prospects are balanced out by those significant longer-term uncertainties surrounding the future of the hard disk drive market itself. A bit more caution baked in.
Okay, makes sense. Now let's shift gears a bit and talk about Intel. They used to be a big memory player, but their strategy has changed quite a bit, hasn't it?
Yes, definitely. Intel historically had a significant presence. They had their NAND flash business and that innovative Optane persistent memory technology.
Right, Optane, I remember that.
But they've largely gotten out of commodity memory manufacturing now. They sold the NAND business to SK Hynix that became Solidigm, and they discontinued the Octane product line entirely.
So they're out of the memory-making business.
Largely, yes. But crucially, Intel remains a massive consumer of memory and a key innovator in memory technologies that are integrated with their CPUs and data center platforms. They still have a lot of influence.
So even though they don't sell memory chips directly anymore, memory tech is still vital to Intel's overall strategy.
Absolutely critical. Their current memory focus includes things like embedded memory within their processors, their OneAPI software libraries for memory management, and their CXL memory expander technology.
CXL, Compute Express Link. That lets CPUs access more memory.
Exactly. It's an open standard that allows CPUs, GPUs, other accelerators to access much larger pools of memory than what's directly attached. Intel's also heavily focused on putting high bandwidth memory, like HBM, right onto the same package as their high-performance chips.
It's closer is faster.
Right, and they're strong advocates for adopting new memory standards like DDR5 and CXL because those advancements directly boost the performance and capabilities of their core CPU and accelerator products.
How does memory integration specifically tie into Intel's AI strategy? They have AI chips now too, right?
They do. Their Habana Gaudi line of AI accelerators uses HBM, which they buy from suppliers like Micron or SK Hynix. Their Agilex FPGAs can also be configured with HBM.
Okay.
Intel's overall design philosophy, you hear them say it, is that memory should be faster and closer to the compute. They're architecting future products with that principle baked in.
What are Intel's key strengths in this evolving memory landscape, even as a non-manufacturer?
Well, their deep systems level expertise is huge, and their significant influence across the whole computing industry. They have substantial R&D capabilities. Look at their past work on 3D XPoint, the tech behind Optane.
Sure.
Their advanced manufacturing prowess, even if not currently focused on commodity memory, could potentially be used for memory-like structures down the road. They maintain strong partnerships with the memory leaders. And their dominant share in data center CPUs gives them huge influence over standards like CXL.
Okay. And their weaknesses or challenges related to memory?
Well, the big one is they're no longer a direct supplier of commodity memory. That means they rely on external vendors for cost and supply, which can be risky.
Less control.
Right. And their past efforts to build an ecosystem around new memory tech like Optane, well, they didn't really achieve widespread adoption. That raises questions. Memory isn't a core revenue driver anymore, and they have faced execution challenges in this space before.
What opportunities could Intel potentially grab in the future related to memory?
The increasing adoption of CXL memory tech is a big one. That plays right into their strengths. Deeper integration of HBM into their products, potential collaborations through their growing foundry services, maybe partnering with memory companies, and developing novel memory solutions specifically for AI and graphics. These are all significant opportunities.
And the threats they need to watch out for?
They can get sidelined by the big memory incumbents, Samsung, SK Hynix, Micron. If large cloud vendors develop more of their own in-house memory solutions, that could reduce Intel's influence.
Right, custom silicon.
Exactly. New memory technologies could emerge and gain traction without Intel's active involvement. And fundamentally, any weakness in their core CPU and GPU businesses would naturally weaken their leverage in the memory space. Plus the usual geopolitical and economic risks.
How has Intel's recent financial performance looked, specifically regarding memory?
Well, Their recent financial activity here has mostly been about exiting those businesses and cutting the losses. Selling the NAND business brought in a good chunk of cash. Now, memory costs and components are largely just integrated into their other business segments' results. The whole company is in a major turnaround effort right now.
What are the bullish arguments for Intel that relate to memory? Why be optimistic?
The U.S. CFPS Act and those domestic investment initiatives could indirectly benefit their memory-related work. The growing adoption of CXL memory and integrating HBM are positive catalysts that leverage their strengths. And their foundry services business, if successful, could open up new partnership opportunities.
And the bearish concerns.
Continued weakness in their core CPU-PU businesses is the big one that reduces their influence everywhere, including memory. Their lack of direct memory manufacturing is a structural disadvantage. Past failures with things like Optane create skepticism about future initiatives. And those broader geopolitical and economic uncertainties are always there.
So what's the investment recommendation for Intel from this report?
The recommendation is a hold.
Hold. Why?
The report really characterizes Intel as a complex turnaround story. Their future prospects in memory are seen as very closely tied to the overall success or lack thereof of their core CPU and GPU businesses. It's not a standalone memory play anymore.
Okay, that makes sense. Finally, let's discuss NVIDIA. They don't make memory either, but boy, are they a huge consumer, especially for AI.
Oh, absolutely. NVIDIA has just established this dominant force in AI and high-performance computing, and their GPUs are incredibly reliant on advanced memory, HBM, GDDR, you name it.
Can you give some specific examples? Where does memory show up in their products?
Sure. They're big data center GPUs like the A100 and H100.
Yeah.
They use massive amounts of high bandwidth memory, HBM.
The really high-end stuff.
Exactly. Their consumer and professional GPUs use high-speed GDDR memory. Their DGX systems, the full server boxes, incorporate standard DDR system memory. And their newer Grace CPU superchip even features LPDDR5X memory right on the processor package itself.
So memory is everywhere in their lineup.
Everywhere. And their immense demand for the absolute cutting-edge memory essentially gives them significant influence over memory technology standards and future roadmaps. The memory makers listen when NVIDIA talks.
And how has the AI explosion directly impacted NVIDIA's memory needs?
Well, NVIDIA's just unparalleled position in AI is driving this almost insatiable demand for memory. More data, bigger models, faster processing. It all needs more and faster memory.
Right.
Their advanced architectures, like the Grace Hopper CPU plus GPU combo, feature tightly coupled, coherent memory pools to maximize efficiency. And their software platform, CUDA, is highly optimized to use their specific memory hierarchies efficiently, software and hardware working together.
What are NVIDIA's key strengths when it comes to memory, even as a consumer?
Well, their dominant position in AI gives them huge leverage with memory suppliers. They can basically dictate terms sometimes.
They need NVIDIA's business.
Desperately. NVIDIA also has a strong track record of working very closely with memory makers to co-design custom solutions tailored to their specific demanding needs. Their massive cash reserves let them secure long-term supply agreements, locking in capacity. That innovative Grace Hopper architecture shows their strategic thinking about integrating memory and processing. And their software leadership ensures that the memory they buy gets used optimally.
Makes sense. What about weaknesses or vulnerabilities related to memory?
Well, they are heavily reliant on external memory tech providers. They don't make it themselves. That makes them susceptible to supply chain disruptions or big price swings.
Supply risk.
Definitely. Their massive and rapidly growing memory demands can sometimes outpace the industry's ability to supply the very latest, highest-end memory chips. Pushing the bleeding edge of memory tech also carries inherent execution risks, delays, yield issues.
Anything else?
Their memory choices can sometimes limit future upgradability for customers. And their business is heavily concentrated in accelerated computing, which is just inherently very, very memory intensive.
What opportunities lie ahead for NVIDIA in this memory-hungry world?
The continued, frankly exponential growth in AI and HPC will undoubtedly drive even higher memory content requirements per system. More GBs, more bandwidth.
Good for them. Drives demand for their products.
Exactly. They have the potential to significantly shape the development of next-gen memory interfaces, like HBM4. They're actively exploring advanced packaging, co-packaging, advanced cooling, all to accommodate higher memory densities and performance.
Pushing the envelope.
Always. Their expansion into CPUs and DPUs, data processing units, will further increase their overall memory needs, and their ongoing software innovations will just keep creating demand for more memory capacity and bandwidth.
And potential threats. What could trip them up?
Increasing competition is one. Other chip makers are definitely gunning for their AI crown, either with general-purpose chips or specialized ASICs.
The competition is heating up.
It is. Potential supply chain constraints or geopolitical risks hitting their memory suppliers could really impact them. Their extremely high valuation and the resulting market expectations leave very little room for error.
High bar.
It's very high. And there are always potential technological limitations, power consumption, the physics of memory scaling that could eventually slow down performance gains.
How has their recent financial performance reflected this critical role of memory in the AI boom?
Their financial performance has been, well, astounding is probably the right word, just record-breaking revenue growth directly fueled by the massive demand for their AI products.
And memory supply was key.
Absolutely. The report notes that the availability of sufficient quantities of advanced memory, especially HBM, has been a key enabling factor, and maybe even a constraint at times. They've reportedly made significant inventory purchases to secure future memory supply.
Locking it down. So what's the investment recommendation for NVIDIA according to this report?
The recommendation is a buy.
Another buy, despite the valuation.
Yes. The report emphasizes their unique dominant position in these transformative AI trends, their strong future growth prospects, and what they see as a significant competitive moat, especially with their software ecosystem.
Okay. Lastly, let's briefly touch on Marvell Technology. Not a memory maker, not a huge consumer like NVIDIA, but they play a really important role in the ecosystem, right? Controllers and things.
That's absolutely right. Marvell is a fabless semiconductor company. They design chips, others manufacture them. They specialize in storage controllers for both HDDs and SSDs. Also, data infrastructure solutions, networking, connectivity, compute, storage controllers, and custom ASICs.
So they make the brains behind the storage and networking.
In many cases, yes. They're a crucial player in the memory ecosystem through these essential controller technologies and also high-speed memory interfaces, including the ones needed for HBM.
Can you elaborate a bit on their specific memory-related products and their strategy?
Sure. They're a leading provider of SSD controllers and also HDD preamplifiers and controllers. Their custom ASICs, which they design for big cloud companies and the auto industry, often incorporate high-speed memory interfaces, including those advanced ones for HBM.
So they enable HBM use in custom chips.
Exactly. They also offer intellectual property IP blocks for HBM interfaces that others can license. Their networking switches and DPUs also need significant amounts of high-performance DDR memory.
So memory is important across their portfolio.
Definitely. Their overarching strategy is to be a full platform provider for data infrastructure. That means making sure their chips, controllers, switches, processors work seamlessly with the latest memory tech advancements.
What are Marvell's key strengths in the current market?
They've got a broad and valuable portfolio of IP across critical areas: storage, networking, processing. They've built a strong position in the data center market. Their custom ASIC business is growing significantly.
In acquisitions.
Yes, strategic acquisitions over the years have definitely strengthened their market position.
Yeah.
And they have significant exposure to those fast-growing cloud and AI sectors.
And their weaknesses.
Well, they operate in highly competitive markets. They face tough competition everywhere. They also have significant customer concentration, particularly in the cloud sector, relying heavily on a few large customers. Yep. They're exposed to geopolitical risks, too. And being fabless means they rely on a limited number of third-party foundries like TSMC for manufacturing.
What are the bullish catalysts for Marvell's growth? What could drive them forward?
The continued build-out of AI and cloud infrastructure is the big one. That drives demand for almost everything they make.
Right, feeding the beast.
Exactly. Ongoing upgrades to data center networking equipment, an anticipated rebound in 5G wireless, and the adoption of Open RAN technologies, successful strategic partnerships and acquisitions, and just strong execution in developing new products, all potential growth drivers.
And the bearish concerns for Marvell.
That intense competition could lead to market share losses. The customer concentration risk is real. Losing a big cloud customer would hurt. They're subject to broader macroeconomic and geopolitical factors. That reliance on foundries creates potential supply chain vulnerabilities. And their valuation and market sentiment are always factors to watch.
How has the recent financial performance been?
They've been transitioning out of a cyclical downturn and seem to be catching the uptrend driven by AI infrastructure growth. They've reported strong revenue growth in their AI-related businesses, which has helped offset some softness in traditional storage. Overall, financials are improving, And the report notes an optimistic outlook for their fiscal year 2025.
Okay. And the final investment recommendation for Marvell.
This one is also a buy.
Another buy. Why?
The rationale is their strong leverage to the growth of cloud and AI infrastructure. The report sees significant growth opportunities that Marvell seems well positioned to capitalize on.
Okay, this has been a truly deep and really insightful exploration into these top U.S.-listed memory and related companies. To try and summarize the key takeaways, it's crystal clear the memory industry is in a strong recovery, maybe even a boom, largely propelled by this seemingly insatiable AI demand.
Absolutely. And each of these companies, whether they're pure-play memory producers like Micron, hybrids like WDC, or key enablers and consumers like Intel, NVIDIA, and Marvell, they're all strategically maneuvering to try and capitalize on this powerful trend.
Yeah, and as we've discussed in quite some detail, there are a whole host of factors, both positive and negative, technological, financial, geopolitical, that are going to shape their success in the coming years. It's incredibly dynamic.
It really is a rapidly evolving landscape, both technologically and economically.
Just a final reminder to you, our listeners, all of the information we've unpacked today has been meticulously extracted from that report, DR 2025-0520, Deep Dive Top 10 U.S.-listed Memory Companies 2025 Report.pdf, which was so generously provided by one of you. We really appreciate that.
Yeah, fantastic source material. And this deep dive really leaves us with a compelling question for you to think about.
Oh.
How will this ever-increasing demand for memory in AI applications not only impact these leading companies we discussed, but also potentially spark breakthroughs in entirely new memory technologies, or maybe drive fundamental shifts in the whole architecture of computing itself?
Interesting thought. Beyond just faster versions of what we have now.
Exactly. So which of these players do you believe is best positioned to truly benefit from this increasingly intertwined, codependent relationship between memory and processing power? It's certainly going to be a fascinating space to watch.